For some more market perspectives and some investment ideas to consider, let's welcome in our next guest, Eddy Gifford, CFP, Wealth Advisor at Tactive. Eddy, thanks so much for joining the show.
Yeah, thank you for having me.
All right, so you have some stock picks that I want to get to, but first I want to get a sense of your take on the overall market, because I was looking at the notes and it doesn't sound like you think this wild ride is over. Tell us, more volatility is in store. Is the VIX going back to 60?
Oh, maybe 60, hopefully not 100, right? Like we've been in this market where since last October, we've pretty much gone straight up. We had a little bit of a blip earlier this year. Other than that, we've just been riding that wave, and waves crash, and people forget that. And last week was kind of like, I guess, like a look into what could happen. Of course, everything's gone away and everyone's forgot about it already, but we got to remember that there's a number of different factors working here. We've got the fact that interest rates have been elevated for a long time now, the lag effects of that. We've got the fact that inflation, although slowing, is, cost of goods and cost to live are so much higher than they were a couple years ago. And so we're seeing people kind of struggle a little bit there also. The other thing that we're concerned about was, the highlight of, a week ago, everyone being concerned about the yen carry trade. Well, when you have 35 trillion in a carry trade, it's not just going to unwind in 2 days. So there's obviously a little bit of fear there too that could pick up. And then we have this thing called an election that's happening in a couple months, and for all those reasons, we just think in general, volatility is going to be here. Plus, it's August and September. The market just seems to be a little bit more volatile in those months. So it doesn't mean that our opportunities, you're still going to be able to find values. Maybe you're going to be able to get into things that you've been wanting to get into for a long time and just didn't pull the trigger. But you just have to be aware of the fact that this could turn into something bigger. And if it turns into something bigger, make sure that you have some protections in place.
So you mentioned a whole bunch of things that could be catalysts to the downside, but I guess the question is, how big of a crash does that, you said every wave crashes. How big is the crash? I mean, what kind of downside are we talking?
Well, at this point, we're hoping for correction. NASDAQ did approach correction territory or got to correction territory. S&P 500, not so much, but we're hoping that we only have, maybe 10 to 15% from here. But if things unwind, my fear is that we end up in a 2000 dot-com bubble-esque type scenario where we just see like this crazy downturn in equity markets, similar to what we saw during the dot-com bubble, where technology really just got bruised and battered. So I'm not going to make any calls, but I can tell you from 2000 to 2002, with the dot-com era followed by 9/11 and a recession, we watched the NASDAQ fall 83% in 3 years. Of course, NASDAQ was still the number one performer over the last 25 years, including that. So, that's why I look at it as, hey, it's an opportunity maybe to buy some stuff on clearance. But at this point, you still got to ride the wall of worry. That if the worry's not there, we're not hitting new highs. If we don't pull back from time to time, we don't hit new highs. So we need these breathers. But just don't want them to turn into an acceleration to the downside, because when that happens, it happens so suddenly that it catches a lot of people off guard.
Okay, I want to get to your picks, and you're talking about buying the dip, but then I'm looking at your first pick on the list, Iron Mountain, and it's up 55% year to date, up 79% over the past 1 year. You'd still be buying at these levels?
Yeah, I'm not afraid to buy on the way up. I think that the old adage in investment in general, everyone wants to wait for that lower price. And if we've learned anything from NVIDIA over the last couple of years, it can go higher. When there's wind at the back and there's demand for what it's offering, you've got a good mix there. And of course, Iron Mountain, they're in a situation where they provide digital transformation, and they also secure that data. And so with the big word being AI and data centers and all that type of stuff, Iron Mountain is positioned well. And when the wind's at your back, you don't sell. Maybe you peel some profits, but you don't sell. You have to lean into things that are moving up. Don't buy the falling knives. That we need stuff that's moving up. And when the wind's at our back, we are not afraid to jump in.
All right. Well, your next pick, Vistra Energy, is up more than 100% year to date, 158% over the past 1 year. So you're buying that one as well.
Surprise, surprise. Same story there, except for a different avenue. Same thing. Energy, energy, energy. What we have all this demand for energy, and some of it is due to the cryptocurrency craze. A lot of it is due to the AI craze. And are these really crazes, or are they just part of the new modern economy? And I think that the general argument is becoming more and more that's just part of the new modern economy. And so without energy, those things don't exist. And so if you have a company that can provide energy for that type of action, that's a spot that you want to be. Now let's be real here, okay? We're talking about the fact that I just mentioned there's probably more volatility. There could potentially be a crash and all this stuff, and that's why anytime that you buy something, you got to have that predetermined reason to sell, whether that's a stop or some type of big picture move in the markets or anything like that. So we would be buying, but we would have a stop in place just to protect us if things go south really fast.
Okay, you have a few ETFs on your list as well, the TLT and then the VXX. Tell us why.
Yeah, TLT. So the Fed, they're telling us they're finally going to cut. And that should be good for bonds. And we've already seen that kind of happen. The interesting thing is when everything was a little bit wonky last week, we kind of saw that fear trade flight to safety scenario come back, where we saw a VIX spike and we saw treasuries do really, really well. So now that we're in a more known market when it comes to bonds, and that they're probably going down from a rate perspective, not up, those can start to be included in diversified portfolio again to help provide the insulation that we unfortunately didn't get in 2022 when everything went down together. So we like the TLTs. A lot of the intermarkets are still telling us risk off, they're blinking. So like big picture stock market as a whole, we're concerned it could be going down, but that doesn't mean that there's not going to be individual stocks that are going up in that scenario. So there, you always got to have a little bit of both in the portfolio, the broad markets, the individual stocks. And then you got to have your just in case scenario. And with the VIX hitting 60 last week, it's one of those things where it's very, very rare that the VIX hits 60 and then just goes back to 20 and never moves again. And so, we think that having that as a potential hedge on your portfolio to kind of offset equity risk if things do get crazy, if the conflict does escalate in the Middle East and the yen carry trade does come back in full force, if something crazy happens in the elections, that can give you a big boost for a little bit of money. So it can't really hurt you, but it can help you a lot.
All right, we have to leave it there, but really appreciate those picks. Eddy Gifford of Tactive, thanks so much.